Did Tesla pull a fast one? And economists still have no clue on what's going on around the world. What's up, everybody? It's Bubba's Bottom Line, and I'm back to give you my weekly analysis of what's going on in the world and what's going on in the markets. And welcome aboard. Hope everybody had a great week. And of course, we've got this Thanksgiving week ahead of us, and it should be a short, quiet trading week. But always great to be here, share some time, and spend some time with everybody, kind of giving my overall thoughts of the markets. And of course, what we're seeing now is, are we seeing this irrational exuberance again? We had the tax plan vote, and of course, it passed. But what do you think of the tax plan? And of course, you'll get my thoughts in my commentary later, but I don't think much of it, as you can probably imagine. And I don't think the markets themselves care much for it either. We did see a big rally on Thursday. But I think after that, I don't think it was any major big deal. I think that the overall week was pretty calm and pretty quiet. But at the end of the day, I think that you got not a lot going on. And I think that's an issue, right, that the markets are kind of signaling to you. You know, if you look at the overall market, the market's tried to break almost on a daily basis, only to come back. And of course, on Thursday, with the big rally based on the vote, it kind of failed late. Oh, it was up big, don't get me wrong. And then Friday was kind of a mediocre, downers kind of day. But, you know, the charts are not supporting that this is going to be a great plan. And I think the Russell's the biggest key, which although rallied huge on Friday, was actually not very strong and not very good and still well off of its highs. But, you know, I asked the question, did Tesla pull a fast one? And, you know, they announced their new semi-truck, which looks really cool. And of course, I'm a big fan of Elon Musk from his overall standpoint as a guy who can get money from anybody and has so far been able to run a companies that make no money, but he's a billionaire. So you can't knock that away from him. But did he wait to make this announcement until he saw that the overall short interest in the stock was really high to get an artificial pop out of the stock? I mean, at some point, they're going to have to make money if this is going to be a real solid company going forward. I think it's, in my opinion, it's dramatically overvalued, and you know, I'd like to be able to hold it short, but of course, it moves so fast, it's hard to do that, especially if you go back into the 90s and remember how fast those stocks can move, because they can break you before they can pay you. So I think that's something that we need to look at. I think, you know, looking at last week's action, gold had a really nice week, solid, pushed up near that 1,300 level again. And of course, Friday had a monster up day. And of course, I think that gold looks great and looks to be something that we'd want to be looking to buy on support levels. Oil continues to try to push higher, had a pretty much of a mediocre week. I think that oil is meant to be sold here. I don't think that this is needed. I think that you're starting to see in the formation of oil that the back months are starting to creep up. So we're losing what we call that premium. Technically it's called a contango formation, where the front is cheaper, and as they go in back months, it gets more expensive. But you're starting to see that flatten out. In fact, in a couple of months out, oil is actually cheaper than it is today. So this looks more like a fear premium being built into oil. Certainly, I'd like to be a seller of oil, you know, and again, I think it's the way that you do it, so that you don't get trapped into a move that forces you to get out. You know, the grains finally look to be starting to pick up a little bit for our farmers and our producers. And of course, we saw some nice action after making lows. Corn made a new contract low last week. But overall, I think that looks to be the great space. And of course, that would be my number one space to be investing in right now, would be the grains and the agricultural products like that. Cattle, looks like it's a little bit split here. I think you've got more room to go down on the feeder cattle. You've got more room to go down on the hogs. I think fat cattle or live cattle has found its support level. So that would be something that we would be very comfortable in buying on any dip, which would be live cattle. We're still looking and have been short hogs and feeders for quite a while, and will continue to do so until they meet the downside objectives. But overall, the big picture remains the markets are quiet. The markets are not real active. We saw a little bit of a move up in the VIX only to fail a little bit. Now it is making higher lows, so that would be something to look at as far as volatility. But I think one of the things we have to be concerned about if you're bearish the market is we're in a seasonal time of markets that are typically strong. Typically we get the Santa Claus rally this time of year, especially when markets have been up big for the year. They usually polish it off and finish big. So I wouldn't try to get too aggressive here in the overall picture. I think you want to be more concerned and look, we probably should be looking ahead to be, if we're looking to get short, until the first quarter of 2018. But we do have some irrational exuberance. Again, you're seeing, well, I think one of the biggest manipulative scams in history when you start to talk and look about what's going on with these markets. Investors are being pigeonholed into one investment class, that is the equity markets, and that is being manipulated by the Federal Reserve and by the central banks around the globe. They have themselves invested into these markets and will continue to try to prop them up. Margin debts continue to rise. We have record margin debts every single day. Now, what is that telling you? Well, it's telling you that A, it might be getting a little bit too frothy. It might be too good to be true because, again, it's just not that easy. But this is what you see when you've got outside forces manipulating and holding up markets. I think this is one of the problems that we go back, and if you go back and look at some of the big cases in history, I don't think there's any bigger case than what's going on now of market manipulation. And usually what happens when markets get too overly manipulated, there's always an ugly ending. Now again, when is the ugly ending coming? Can't say. Don't know. Not going to try to predict it. But ugly it will be. Now again, if you're an investor, it shouldn't really affect you or bother you, because if you're just investing, then you can overcome some of the things. You should be hedged anyways. That's one of the programs we obviously offer, but forget about what we offer. You should be hedged or protected or know that you're not going to need that money anytime soon. But if you're one of those investors that's borrowing like crazy on margin, trying to capture all this market, you're making a mistake and you will be forced out. You can bet on it, okay? You'll be forced out at a loss, and I don't want you to run into the same problems that those in the 90s ran into, which is they made a lot of money, had to pay tax on it, then got forced out and lost all the money, but still had to pay the tax because it was over different periods. So again, it's time to be a little bit more cautious here. But again, straight investors, either hedge, or if you're not worried, then let them go, because they'll go up and down, because we do know one thing, that the markets do go up 8 to 9% year over year, just not every year. All right. But I think that we've got some things happening. Interest rates, although they were a little bit flat, lower last week, should start to rise. We've got a Fed hike coming up in a couple of weeks with certainty. I think you've seen that if the economy is really good, then you're going to see a rate hike anyways. All right? We should have higher rates. This is one of the issues that bothers me about the whole story. All right, but again, this is an area that the banks want higher interest rates. Everybody wants higher interest rates, but I believe that the master manipulators of the Federal Reserve are afraid that if they let interest rates rise naturally, that the markets might sell off. Now, why they care about the market selling off is beyond me. The artificial build we have here is nothing more than a house of cards. Now, you can look at the jobs and they tell you how great the jobs are. Jobs suck. They're not even good. Why aren't they good? Because the problem is that the people that need the jobs aren't qualified there, the jobs are available. So in big picture, looking at it, there are a lot of jobs available that are good jobs. Unfortunately, the people that need those jobs are not qualified, like me, for example. I could not take any of these digital jobs. There is no more jobs for manufacturers and part workers and piecemeal workers like that. That's the bigger issue that we're seeing here. But I think the bigger story with interest rates is the yield curve, which is flattening. And if you don't understand what the yield curve is bonds and notes start out at as low as daily, monthly, yearly, 2 yearly, 5, 10, and so on, all the way up. So they're all supposed to be in progression. So the shortest term rate should be the cheapest, and the farther out in time you go should be the most expensive. And what's happening is that the shorter term is starting to rise while the longer terms are coming down, And that's what we call flattening the yield curve, which is not a good sign for the economy. We've seen this happen before. It never works out. But this is, of course, this ties in to the people that are in charge, the economists that have no clue. This is, again, something that I think you need to be aware of and understand, that the economists that are evaluating the overall economy, that tell you that everything is better, they don't ever recognize anything until it's already too late. I don't need somebody to tell me that we had a bubble 10 years ago. I need somebody to tell me today whether this is not a bubble. And they will never admit to that. The problem with the economist field is that it's all based on theory and what's supposed to happen by a book. We all know that the books don't necessarily help you when you need to get something done now. That is a major problem that, again, that we look at from our standpoint, is that they can't tell you. And that's always the case. They're always late. They're very much like the Federal Reserve. Of course, the Federal Reserve is run by a bunch of economists, but they don't get how to adjust today. And they don't understand that you do need sometimes a little bit of common sense to change something. That becomes the overall bigger problem, that when they can't figure out what to do, it's going to hurt you and hurt me in the future. And that's where we see this mess starting to boil, is because they have no clue that the jobs stink. They're not getting natural inflation. They're trying to handle things and figure things out based on theory versus based on real life. And that itself becomes the overall bigger problem when we watch what they try to do, because again, the overall picture that they develop has no clue, and they have no idea of what's going to happen next. They have to wait until it plays out, and then they can tell us, after we're already broke, they can come in and tell us, well, hey, you should be broke now. Again, this recessionary thing, everything that they do does not tie into today and what most of us care about, which is today. Right? So that's where this whole big market manipulation and legal market manipulation, but just the same, this is no different than many of the big scams back in the past, where nothing ever shows up until it's too late. And that's what I want to warn you, is not to be waiting until it's too late. And again, I'm going to just say this one more time. If you're an investor, it shouldn't bother you one way or the other. You should be hedged, but even if you're not, as long as you're not pouring in money into the market that you don't need tomorrow and you don't need for an emergency, then it doesn't matter, because you can withstand and let the markets resolve themselves out. Because when they do have the next correction, which we will have, they will also most likely rally back. And I would say 10 years from today, they'd probably be an average of 8% higher per year over the next 10 years, next 15 years, whatever it is. But if you're going to need that money before the next year or two, then you better be careful and make sure how you invest it. Because again, you don't want to chase down yield, because that always leads to a major disaster. This is Bubba's Bottom Line. I am Todd Bubba Horwitz, and always great to be here with you. And I want to remind you to check out patreon.com, patreon.com/Bubba Trading. That's what we're looking to raise some high school investing money. Of course, I've run a program for the last 6 years, which I've totally financed myself, and we are in 300 high schools and looking to get into 30,000, but it's going to take some dough, and I don't have enough to continue to support this on my lonesome. So we're looking to raise a little capital to help continue to educate our financial young kids and teach them some financial literacy, so that we don't have another bunch of economists that have no clue of what's going on. In the meantime, don't forget to get the Bubba Show every single day at libertytalk.fm, 2 to 3 Eastern Time. And if you like futures, check out my Black Friday webinar, which we're having this Friday at noon Eastern. We're going to talk about everything, but again, futures seems to be a great place to be investing in right now and to be trading through. So we're going to step out here for a break. We'll be right back with more of Bubba's Bottom Line after the break. We'll be right back. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz with you on this glorious week of the new show. And of course, holiday week, as we said. I hope everybody has a great Thanksgiving and, spend time with friends and family. Week figures to be very quiet from the trading standpoint. Again, one of the things about quiet markets that you should be aware of is what can happen when they are quiet. And that means we could have a move that would be bigger than expected in either direction, because the markets are going to be thin. Thin markets are going to make, markets can do things that you would never expect. And of course, I go back a number of years ago when the Dubai had a problem with oil and the markets collapsed for a few hours and everyone was panicking because that's what happens when the markets are thin. So again, it's the best week to really observe, not to be overly involved here because you can get some moves that are strange and out of character because of the thin volume. But I think one of the things that we need to understand is that we've got so much debt. Nobody's addressed the debt. You know, with everybody's positive views on the markets, okay, nobody said, well, how are we going to pay back this dramatic amount of debt that we have? How are we going to create businesses to handle this debt? And that has not been addressed. And I find that very concerning from an investor standpoint, from a citizen, from every walk of life. I find it concerning that we continue to ignore the major debt that's being built and being added every single day, which nobody has decided to address how it's going to be paid back. I continue to hear that it's going to be paid back through this ridiculous tax plan, which again I will address in my commentary. I don't see it. I could be wrong. It doesn't make me right, but it does make me have an opinion. I think one of the big things that are now becoming an issue is the repetitive model of this time is different. That now we're starting to see again, no down payment loans, no doc, no down payment. You know, start lending money again. Now again, does that not create a housing bubble or another bubble in some way? I think that again, this goes back to the debt issue. If you allow money to people that shouldn't have the money, and you allow people to borrow without proving it, and you allow people to borrow without having to put anything down so they have no skin in the game, what does that do? Well, first of all, that artificially inflates price of the asset that they're buying because they've got really no risk. You know, if you buy a house and have to put 20% down, you've got your own skin in the game. If you can buy a house with nothing down, you've got no skin. So if it doesn't work out, so what? Walk away, right? Again, these are things that, you know, nobody talks about. And this is where I think the economists once again miss out. And this is, again, the greed factor playing out in different markets because the banks want to participate here as well. And of course, what risk do the banks take? They've got the Fed to bail them out, right? Again, we're going to think that they're going to actually have a problem. I mean, the Federal Reserve always bails out the banks, especially the big ones, which is another problem. You know, you have to remember that the picture that we're looking at has got a lot of murky mud inside of it. The inflation targets that the Federal Reserve is trying to attack can come in, but what they're doing is they're trying to borrow their way out of debt. They're trying to create more flow, more velocity of money to push these interest rates higher. But the interest rates should not go up based on what somebody is artificially trying to handle. Interest rates should be going up because there's a true demand for money and there's a true offer of money, and rates should go based on what the market will bear. But still, we cannot have these no doc, no thing loans, because what you're seeing is that everybody's out trying to buy loans again. If you remember, you know, if you saw the movie The Big Short and you remember the part where banks are buying up loans, and I happen to have some first-hand information about how fast banks are trying to buy these loans up, they're not even looking anywhere. They don't care. They just want to get the money on the books because, again, if you're a bank, they don't have a lot of risk because even if the loans go bad, they get bailed out. So I think that's something. I think one of the things you look at is, again, the earnings and the repatriation of money. If these earnings are as good as we say they are, and I don't believe that they are, again, because, again, they're not using them for capital spending, CapEx spending. All right, if we have this repatriation, do you think that these big companies, if they repatriate their money back to the United States, do you think they're going to start opening plants and manufacturing facilities in the United States, or are they just going to buy back their stock? I said they just buy back their stock. Again, there's a lot of advantages to doing that. And of course, it's great for the inside companies. It's great for the shareholders. It's not great for the economy. I think that's another problem that we look at. I do think that there's some interesting things that happening is that the good jobs in America are not really there. I think that you have to look at now that they're now starting in about 20 states now. They have now restricted, if you have medical bills, medical payments due, you cannot work unless those bills are paid. Now, again, I can understand and deal with part of that, but I think shouldn't they garnish wages instead of not having those people work? I think that's another problem. See, this is where the whole welfare system comes in, the whole system of the free money for everybody comes in, is that you have to draw the line somewhere. And I don't think that because a person cannot afford to pay their bill, that they should be locked out of a job. I think that the person should be, their part of their pay should go to pay back that bill, but you need to get people working. And I think this is another sign of big government becoming too big and taking over. Those are issues that are really something that we need to address because of the problems that have been created by the Fed, by the way that we run businesses right now, because we are creating this overall opportunity to create massive amounts of debt because we don't care. And that, I think, becomes also the bigger problem. I don't believe that there's a reason to not at least put people into the opportunity to either pay that money back and create the job market. This is where, you know, these payments come in. And I think the overall picture is you're seeing a lot of hidden fear in the markets right now that's kind of underneath the surface, which is indicating that, again, how long can this bull market rally? It's hard to say. And again, I'm not going to try to predict the length of the market of when it's going to end. I just know that it's going to end. That I know for sure, for certain, because that's just history. But here's something that needs to be evaluated, and that is simply the overall views and the way that we're seeing markets function. And we're seeing that the big companies are taking advantage of every loophole in the overall system to benefit themselves. And I have no problem with that. That's a capitalist view. But this is where the unfair and inequitable part comes in. And I think that's one of the things you're now seeing with the advance of cryptocurrencies. You know, the exchanges now are going to start to offer some cryptocurrencies, some derivative products. For example, the Chicago Board of Options Exchange is going to have a product. The Chicago Merchant Exchange have a product. And I think the biggest problem with those is we've seen some wild swings because some people are afraid of the fiat currency system. They have now used a lot of these cryptocurrencies to replace gold because, again, they're a lot easier to carry. You can hold them in your digital wallet. But I think the biggest thing here and the biggest creation of the problem is that economists don't understand it. So what do? They call them a bubble. Now, again, they may be somewhat in bubble territory, but I believe that the cryptocurrency world is going to be legit. I believe the cryptocurrency world is going to be something that will be used going forward. I think that the banks are already trying to figure out their way into that space, although they outwardly, Jamie Dimon says it's a fraud, others, but I think behind the scenes, they're working on ways to get their own footprint inside of those cryptocurrencies because I believe that they're for real. The technology used to transmit those, the blockchain, is already being used and very successfully. And in fact, many major companies are involved, IBM one of them, and many major countries are already using it to exchange. But the overall crypto space, I believe, is going to be legit and real, and it will find some price to settle in. And it may not be at 7,000 per Bitcoin or 8,000 or 2,000 or 10,000. That's hard to say, but I think that it will have a real value and a real part of it. But I think part of the propulsion now is because of the lack of understanding by most and those who try to get in and chase it down like any other product. Remember, all products get chased down at some point or another. They all create some sort of a bubble. The question is can it survive the bubble and then come back stronger, which is exactly what the NASDAQ did. The early bubble popped, but now look who runs the market now, the tech stocks, Amazon, the FANGs. So that's the real story with the Bitcoin and with the cryptocurrency world and what's going on. The overall markets look to be bubblish, but remember, the time of year we're in, seasonally strong. Holiday week coming up. There's no reason for anybody to step in now and say this is the end, this is the top. All right, the market will give you a valid footprint. And when we look at the footprint we're seeing now, what you're really seeing is a consolidation footprint. Really non-committal as to which way it's going to go, or what we would call, in our business, the most confusing part of the market. When markets are in consolidation, that is the highest time of uncertainty of which way the markets will break, one way or the other. So what we're going to look for is wait for an opportunity to find a valid footprint, because the market still could break higher. Based on history, we could see another 3, 4, 5% before the end of the year. I personally do not expect a major breakdown in the markets until after the first of the year. And I don't mean right after the first year, I mean at some point. I think that's what you're going to get. But you've got light volume still, you've got light action, not a lot going on. So let's be more careful here, and let's more enjoy the holidays versus trying to fight into the holidays, because again, even though they could sell off this week, they don't figure to sell off. All right, that's you have to base it on real data, and the real data is historically they're not going to sell off into Thanksgiving week. So that's what we want to watch for. In the meantime, we're going to stop out here for a break. This is Bubba's Bottom Line, Todd Bubba Horwitz, and of course, always ready to be here with you. I want to make sure to remind you to check out my highschoolinvesting.com website. We want to make sure we try to build this financial literacy program for kids. I've financed it myself for the last 6 years. We are in 300 high schools, which we give the program away for free. Nobody pays for it. So now we're trying to get some funding and some donations to help push that program further and get into 30,000 high schools. All you have to do is go to Patreon, patreon.com/Bubba Trading, and you can check out and make your donation. We're offering some nice webinars and some nice gifts for those who do help us out. In the meantime, don't forget to get the Bubba Show every day at libertytalk.fm. You get to hear me for an hour every single day. In the meantime, we're going to stop out here for a break. We'll be back with my commentary after the break. This is Bubba's Bottom Line, coming right back to you. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz with you, and of course, guess what? It's my commentary. I'm so excited. All right, so I led up to it all show, the tax plan. I don't know what you think of the tax plan, but I'll tell you what I think of it. I think it's a Donald Trump settled to get a victory. I think he got squeezed so hard, and he's had so much stuff going against him between all this infighting and this battling within his own party. Forget about the left for now. That he just wanted to get something done and get it passed. And besides, it is not official yet, right? It's only the House. We haven't got through the Senate yet, and God knows what they're going to do. They're a bunch of, whatever. In the meantime, but let's look at the plan as it is, all right? Why is it that big companies, big business is going to pay less tax than little business? Why are we getting that divide again? Now, again, I understand that they're bringing everybody's taxes down, but why should a big company pay less than a small company? The small company is already at the disadvantage from purchasing power, from competition, from advertising, from every other walk of life, and now they're going to be even more penalized because they're going to pay a higher tax rate. It costs a small business more money to operate on a day-to-day basis. Now, if you truly want a great economy, then you need to have small business and give them the competitive edge, because they have to be able to compete with big business. I'll use the banking industry as an example, just because that's the easiest one to pick on, and that is very simple. If they're going to pay less tax than the local farm or community bank that's in your neighborhood that you'd like to do business with, then everything there is going to be cheaper and easier for them to profit from. Now, the one thing that nobody pays less on is regulatory information. Now, the big banks, they basically tell the regulators to go, get the heck out of here, right? And the little guys, they got to sit there and fight with it. So already the cost of regulation is the same for both. But the process afterwards is not. It becomes much more expensive for the little bank. So there they get penalized. The everyday business operation is more, so then they get penalized. So now you want to, again, penalize them farther by putting in lower taxes for the competition, which then takes away competition, which brings back to we're too big at everything. And the too big to fail mentality, the too big markets, the too big company, like now in the retail business, Amazon and Walmart, is a detriment to the average American on an everyday basis. Yes, today prices are good and they're cheaper, but do you think that they will stay there when all the competition gets wiped out? And that's where I think the problem comes in, is as you eliminate competition, and I think this tax plan will do that. That's my problem. As you eliminate the competition, you take away the pricing power, and you take away the benefit for the average person. This is a problem with this whole tax plan, that it really doesn't do anything for the little guy. It doesn't change anything. And again, as far as these SALT deductions, you're taking away more business. And again, I don't know what the right answer is in the state and local tax deductions. I mean, I live in one of the worst states in the world, and I got to pay them. And I'm not sure what the right way to handle this is. But I do know one thing, that if I take these deductions out, I am now destructing the business people. I don't really care about the state governments. They're full of crap. But it does bother me that we're going to now destroy all of these small business, because if you get the exodus out of these states, all right, or out of these cities that have these state and local tax deductions, then what are you doing to the community? You're destroying the small business once again. That's where I see the flaws in this tax problem, is the elimination of businesses, because of you're going to force people. There's a lot of great states out there that do not have state tax, that do not have those local taxes. And again, that will force, if you don't allow people to deduct those, that will allow them or force them to move elsewhere. If they move elsewhere, you're destroying all the little local business that's around there. The big guys, they can get around it. People are going to go elsewhere. But when you take away the small guy who's been, in business for 21 years on Fifth Avenue, that's an independent, you're now going to start to hurt these people. And again, that's more of the destruction of small business. That was where the bigger problems are developed by this crappy tax plan. I think this was a settle. I think this was more about the win of a legislation win versus let's really put together a great plan. Now, again, I don't blame President Trump for settling. I understand that he wants to get a win. I do blame the House and the Congress and the Senate for what they've done and for their lack of willingness, as they sit out there and smile at you and say, we're doing this for you, the American people. Right, they're doing it for me. They're doing it because they want to protect themselves. They want to keep that slush fund open for all of their encounters that are against the law. They want to continue on their pace to live their life. They could give a rat's potato about you and me. And that's where I think the problem, these whole plans come in, which is why the bigger government needs to be cut down to size, and why we really need to get into the legalities and illegalities of the things they do. I wrote about this about a year ago, about some of the things that go on there that need to be addressed. But that's why I think this tax plan is no good. I think it hurts small business. I think it puts bigger business in a bigger advantage. I don't think it does anything for the individual. At the end of the day, they can stand up there and tell me how much you're doing for me. In the meantime, I don't see it, but I do see this. This is it for Bubba's Bottom Line. Everybody have a great, happy Thanksgiving. I hope you enjoy a lot of friends and time with your friends and family. I'm thankful that you chose to tune in my show. In the meantime, that'll do it for today, everybody. This is Bubba's Bottom Line. Thank you so much. We'll see you back here next time. Have a great week, everybody. Have a great holiday. Thank you so much. Todd, Bubba Horwitz, signing off. We'll see you later.